Hello and welcome to today's NinjaTrader Ecosystem webinar event with Chris Knox of ZoneTraderPro. My name is Tiffany and I am a platform representative at NinjaTrader. I'd like to mention that it is important to understand that there are substantial risks in trading commodity future contracts in Forex. You should carefully consider whether such trading is suitable for you, and it will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with your broker, and you can even incur losses beyond these amounts. Please inquire at the link provided for more information or for a copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation nor recommendation, but simply educational in nature. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage directly at the information provided. The NinjaTrader ecosystem website is home to hundreds of third-party apps and services, all centered around the NinjaTrader platform. With new tools added nearly every day, NinjaTrader ecosystem is home to hundreds of apps and services. You can quickly and easily find the tools and services you're looking for with a simple keyword search. You'll also find information about upcoming webinars and on-demand video archive to view event recordings at the link provided. For up-to-date information, be sure to like or follow NinjaTrader on all social media accounts. I provided both the Twitter as well as the Facebook link in the chat. NinjaTrader is always free for advanced charting, strategy, backtesting, and trade simulation. To ensure that you are on the latest version of NinjaTrader and pick up our free live data trial, please visit the following link. And if you can purchase or release NinjaTrader at the following link. And if you are just getting started with NinjaTrader, we offer free live training on a daily basis. You can view a schedule of weekly webinars at the following link. We are very excited for this unique event in which Chris Knox will demonstrate using ZoneTraderPro divergence patterns to successfully inform a trade. Thanks again for your attendance today, and without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Chris. Please take it away, Chris.
Hi, Tiffany. Thank you. I want to welcome everybody this afternoon to this webinar. And of course, we've already gone through the risk disclosures. And what is really important is that we all remember that past performance is not necessarily indicative of future results, because I'm going to be talking about some statistics today. Now, just a real little bit about me is I created this back in 2007, and I, like everybody else, was getting tired of buying software and going to seminars, and things didn't work. And initially, what I did is I created ZoneTraderPro to identify repetitive patterns found in price. In 2017, I added order flow to it, and then in 2019, I've added some really interesting tools, including the tools we're going to talk about today, for detecting order size and divergences, accumulation, distribution. And towards the end of the presentation, I will be illustrating some brand new concepts involving the VIX that are going to be super cool and important. So stick around for that. Basically, the price patterns, there's 5 types of them. I'm just going to go through this really quick because I want to get to the good stuff. But basically, there's reversal patterns, exhaustion, trend, and divergence, and strong trend patterns. With the order flow indicator, what I'm doing is I am doing a lot of pattern identification within the order flow. And 2 of the most powerful are the point and control extension trade and my ZTP order flow. And these are really interesting, but like I said, I want to talk about some other things today. And if you got any questions whatsoever about the order flow or the price patterns, of course, I'll be here, and we'll look at those in extreme detail. Now, what I want to talk today about is divergence. And in order to talk about divergence, you need to understand orders and how they're reported in NinjaTrader. What makes ZoneTraderPro different is that the tape is being reconstructed. So we can go and we can filter for the size of a contract of the order. In with these settings that you're seeing in front of you on the screen, what I'm basically doing is I'm filtering for orders between 31 and 99 contracts. The problem with other software is that it only picks up the size of the fill. And that size of the fill is basically useless as far as I'm concerned. In the time and sales, this is what you're seeing. You're seeing the size of the fill. You're not seeing the size of the order unless you have ZoneTrader Pro. Now, if we look at all contracts traded, there is no difference. The major and fundamental difference is that if we want to filter for large contracts, and as you can see from the cumulative delta down the bottom, the red line I've gone and filtered for 1 through 7 contracts, and the green line is filtered for 25 and more. So as you can see, as the smart people were selling, the people trading less contracts were the buyers here, and price ends up selling off. And you might be asking, doesn't NinjaTrader cumulative delta have a filter function? And yes, it does. But it goes back to that basic difference that if you want to filter for large contract traders. And what you're seeing here, this is the NinjaTrader cumulative delta indicator on the volumetric bars. Ninja is picking up the size of the fill and it's not the size of the order. And that is super important. This is what we're seeing in the time and sales windows. It's not the orders that we're seeing here. So what ZoneTrader Pro does is it goes back and it makes that cumulative delta indicator, reconstructs the tape. And without the tape reconstruction, again, size of the fill. With tape reconstruction, we see the size of the order. And that's why you see the divergence in the large lot traders. Now, let's understand exactly what the ZoneTrader Pro advantage is. The ZoneTrader Pro chart is on the left, and the green cumulative delta is using reconstruction and filtering for 25 or more. The red cumulative delta filter is also set at 25, but the tape is not being reconstructed. So the red and green circles on the chart is an exclusive ZoneTrader Pro indicator, which I call delta strength. And what it's doing is it's picking up individual trades of 50 contracts or more. And the chart on the right is exactly the same time frame and has the default cumulative delta indicator also set at 25. The cumulative deltas for the volumetric chart, which is the one on the right, and the unreconstructed ZoneTrader Pro cumulative delta, well, they agree. The difference is the cumulative delta is about negative 225, and the market then fell 13 points. The difference in the reconstructed cumulative delta is negative 2,600 contracts, and that really is what's supported by the trades indicated in the delta strength indicator. So that's why, you know, this is basically a really important indicator. Now, what is divergence? Well, standard divergence is basically what we're thinking of when we think of divergence. Price goes higher and the cumulative delta is lower, like I'm illustrating here. And this indicator, it's displayed in real time. But ZoneTrader Pro has two other types of divergences, which are actually more powerful than regular divergences. Accumulation and distribution divergence is special and unique to ZoneTrader Pro. It is based on all trading that occurs between a high to a high or a low to a low. Then there's something that I call special divergence. And I'm sorry, I just didn't have a better name for this, but special divergence is special and unique to ZoneTrader Pro. It's based on all trading that occurs between a high to a low and a low to a high. Here you see a long trade immediately followed by a short trade. What is happening is that as price fell, large lot traders were actually net buyers. And as price rose, the large lot traders were actually sellers. And that's what kind of makes us a little bit special. So what I'm doing, one of the third piece of the software is volume analysis. And I'm not going to get into volume analysis. It is extremely important, but I do want to get to the divergences. But real simply, I have some numbers on the chart, and the KP2 is the filtered delta from the low to the high. In this case, it was 4,253 contracts. Divide that by the 17 tick move from the low to the high, and we get a ratio of 250 contracts per tick. And this is a very high number, and that suggests that contracts are being distributed by sellers on limit orders. And that's what makes this so important. But again, I'm just going to touch on it lightly right here. It becomes very interesting, and even more interesting when we have a distribution divergence like we do in this example right here. So with the distribution and accumulation divergence, we end with these numbers that are generated. We now have two ways to see accumulation and distribution of the contracts. The indicator identifies the short distribution based on all market orders that you're seeing from the high to the high. The ratio indicates distributions based on limit orders from the low to the high, and that's where you get these ratio numbers in here. So we're actually looking at two things telling us that we have distribution here. On this chart, what BloodHound is doing, which is the red racing stripes here, BloodHound is identifying the two short patterns with order flow. And both of the short trades have distribution divergence going for them also at the same time. And again, this distribution divergence is based on market orders from the previous high to the current high. In this case, the KP2 ratios here, where you see the two divergences were very high, 258 in the first example and 210 in the other. And this is indicating that a high number of contracts are being distributed as price rose into those patterns. And this is kind of an old slide before COVID. And so I put in there that 95 is base, 95 or greater back then was what I considered to be normal liquidity. Now, what I say is that these numbers are relative to what is occurring in the previous up and down swings. But when this slide was made, 95 was considered significant. Normally, I'd explain more about these numbers in detail, but the time is limited. What I want to talk about next is more interesting. But briefly, these high ratio numbers that you see on these charts, the 175, the 183, the 250, the 158, they're all indicating that limit order distribution, and it was a great signal to go along with the ZoneTraderPro distribution divergence signal. And I just want to emphasize here, I realize that there's a lot of stuff on this chart here, and I do hear that. What I do is I provide free personal training after the purchase to explain all of the stuff that you're seeing on the chart, what these numbers mean, what all of the indicators mean. And that, that really is super important. Now, here's what is something that is completely new, unique, and interesting. And what you're seeing is the spiders chart. And the SPY chart is basically the tracking stock of the ES futures, what you actually go and trade. And what I had done is I had put the ZTP divergence indicator, and I'd also gone and created a BloodHound template for this. Now, originally what I was trying to accomplish was to look at what my numbers, those ratio numbers were. But when I put on the divergence indicator, I literally couldn't believe what I was seeing. And then I developed the BloodHound indicator to tell me basically what is the trend involving the VIX. So that's what this BloodHound template is made to look at, is the VIX, which is the options fear gauge. We're not trying to call highs and lows with this. And there's basically some rules here to using these divergences, but the main rule is that we're not interested in the regular type of divergence. What we want to see is we want to see accumulation, distribution, and special divergence. On the chart, you're going to see a blue line, and that blue line is a divergence signal that became non-divergent. So nothing is ever going to disappear from a ZoneTraderPro chart if a signal doesn't work. And basically what we're looking at here is an 18-point drop in the market in the price. Where you see the long divergences at, well, those are legitimate signals if you were thinking about covering a trade, but we wouldn't necessarily want to be trading against the trend by going long. Now, I get it that there is a lot of information on this chart and to take in with the previous slides that I'm showing, but let's simplify it. The ZTP VIX background is giving us the trend. In the chart right here, we're only taking trades in the direction of the trend. We start with 2 shorts followed by a change in the VIX direction, and then there was 6 long trades. So there's 8 different winning trades on this chart. Each of them correlates to a 3-point win on the ES chart. And that's because what I've done is I've set the indicator to zigzag at 30 cents, which is generally going to correlate to a 3-point move on the ES. And then what I've done is over a 3-week period from September 14th to October 2nd, I basically did some statistics. And there was 567 trades with about 430 of them being winners, which is about a 75% rate. And it's very important to remember here, I want to stress it again, that the past performance isn't necessarily indicative of future results. I've created a very detailed video which takes a deep dive into these statistics, and you can find that on the ZoneTraderPro website. So let's take a look and understand just a little bit more what I've created. The CBOE Volatility Index, or the VIX as it's called, this is a chart of it, is a real-time index representing the market's expectations for volatility in the coming 30 days. Investors use the VIX to measure the level of risk, fear, and stress, or stress, in the market when making investment decisions. Traders can also trade the VIX using a variety of options and index and exchange traded products, and the symbol VXX is one of those products. As a general rule, as the VIX is falling, the ES is rising. And as the VIX is rising, the ES is falling. The next slide will be of one of those, will be of the tradable VIX signal, the VXX, with the divergences applied, which is the same time period as the chart we're looking at right here. So what we're seeing in the VXX, which is the tradable chart, you see the ZoneTraderPro divergence indicator picking up the same divergences. VXX is tradable, which is why divergence works here. One super important point here. The ZoneTraderPro divergences are not based on divergences of indicators like an RSI or stochastics. It's actually picking up divergences in the underlying being traded. Those, in my opinion, when a divergence indicator is based on an RSI or stochastic, in my opinion, those are completely useless and irrelevant and just a waste of time and money. ZoneTraderPro divergences are based on the actual shares or contracts being traded. As the VIX and the VXX rises, this is generally good for a short trade. So if we're looking for short trades, we want to buy divergences on this chart and the opposite for a long trade. The rising VXX shown here is generally good for a short trade. So if we're looking for short trades, what we want to see is a buy divergence on this chart. Okay, so what's on this chart right here? Well, what I've done is I've taken an ES chart, and where you see one of the red arrows, that was SPY divergence. So when we have a black arrow, there was VXX divergence at the same point. And the green circle is where there was a long divergence signal. So we're basically in a sell-off here. And the areas in green, those are basically saying, well, you should maybe think about covering your trade. We're not interested in those because we would be trading against the trend, but those SPY long signals are excellent areas to cover any short trade. And you notice how they all get about 2.5 points. And, that's not exactly good risk reward, especially, because we're trading against the trend of the VIX. Here's another great example of just what we see on a daily basis. We have a couple of nice short signals which take us into this long trade setup with the background being green. On this chart, we have the three short signals against the trend that had VXX divergence, and they all worked out. In addition to those that go with the trend. So going with the trend was equally as profitable. Notice the losing signal against the trend at 15:07 hours, which I put in red right here. This is important. ZoneTraderPro isn't trying to identify every zig or zag in the market. We're not trying to do that. And it's just a mistake to try to think that you are going to trade every zig and every zag and do that successfully. What ZoneTraderPro is trying to do is it's trying to identify the highest probability trading opportunities. And what you're seeing is when you have the combination of everything working together for you. And here's a chart. This chart, what it's showing is when we have the divergence signal in combination with the SPY. So the SPY is what you're seeing on with the red arrows and the green arrows, and you can match those up with what the divergence indicator itself is saying. Again, really powerful when we use all of our tools together. And that's really important here. What ZoneTraderPro is, it's just not one thing. It's a group of 4 separate distinct tools. Then here's another chart trading with the trend. Basically the same legend as before, SPY divergence. Notice the losing trade at 13:08 hours, down here. Again, you did have both and you had both a long signal and the VXX divergent at the same time, but the VIX was just telling you, don't do it, and to stay short for this period. Now, one of the biggest questions I get is, what does this actually look like in real time? So what I have is I have a video right here, and I've speeded this up to 3 times. So this was something that I recorded on September 24th, and it represents a day that was extremely volatile, which is basically why we're going to see 3 trades in this time period. Now, remember, it's speeded up 3 times, but each one of these trades is worth about 4 points. So the ES chart, this is basically what my trading setup looks like, what I trade with. The ES chart is on the left, the spider is on the right. And I do have different BloodHound templates on these charts, and that's why you might see one BloodHound template green and another red. So I'm just testing right there. And basically what we're going to start with is we're starting with a special divergence short signal and a SPY divergence signal that had just gone non-divergent. So let me go ahead and start this. So there is the non-divergent signal right there. It went blue pretty quick. Next, what we're going to be seeing is we're going to be seeing a long accumulation signal on the ES with long special divergence on the SPY. So there you see the signal on the SPY in real time, basically when the zigzag created another zigzag. Now, it's going to move on the close of the bar, and the close of the bar reevaluated the signal, and that's what turned it blue. Basically, if price trades lower and the bar closes, we're going to update that signal. Now, what you're seeing right now is as price traded lower, the accumulation divergence, a different signal occurred there on the SPY. Now we have the special divergence on the SPY. Notice that the SPY is trading higher. We wait for the close of the bar. And it reevaluated. It said we should still be short. The ES chart closed and gave us a distribution signal there. We now have that accumulation signal on the SPY again. And what's really interesting here is what I'm going to be looking at in real time is I'm going to be looking at the cumulative delta, which you're not seeing here. And that's going to inform my decision about whether or not I'm going to take it off when I have that real-time information. Also what BloodHound is telling me with the state of the VIX. So as we see, we traded through the SPY accumulation became non-divergent, and that stays on the chart there. And that's going to be it for the live look at the charts. So basically, there are, and I'm going to get to questions right after this. Basically, we can draw some conclusions from this software. There are market orders moving the market, and they can be classified into identifiable price patterns. And those patterns, they're forming on most market reversals that ZoneTraderPro does identify. Only ZoneTraderPro teaches you, and this is what the personal training is about, how to avoid high-risk trading situations by using the BloodHound template and trading with the trend. The order flow suite makes it easy to understand order flow because it's basically giving you the order flow in real time. It's showing you the volume and the rapidly developing patterns in the order flow, and it's doing all that in real time. The ZoneTraderPro also has a very robust divergence indicator, which is basically the whole point of today's webinar. And that's based on real-time trades, and it's just a great addition to your toolkit. When we use the ZoneTraderPro divergences on the SPY and the VXX, that's providing just so much additional information and trade confirmation. Only with the ZoneTraderPro can we see these divergence and the volume analysis in real time. So, basically, I'm going to come to the conclusion that you are going to need ZoneTraderPro to effectively trade using the real-time information. And this is a suite that no other indicator suite offers. And basically, what I'm going to do is for the next 48 hours, I'm going to discount the software, which is normally $2,695 by $200. And that is valid for, like I said, the next 2 days. I'll give you an extra $50 if we do the digital delivery, and basically call me and I'll explain how that works. If we use PayPal, I need to deliver a physical product. So that's basically what that is all about. So I want to open up the chat window now and start looking at some of the questions. So sorry, sorry, I didn't show the pointer with the data. Sanjay asks, the numbers are great, but how does one use this information to get into and get out of a trade? Basically, Sanjay, what my indicators are doing is they're allowing you to read what the market is telling us. And again, that's the volume analysis point of that. I do have the indicator, which is the delta strength, which I did illustrate on one slide, where we can see large lot traders come in. But generally, what I use personally is I'm watching the cumulative delta on the screen in real time to see that move in the cumulative delta. A lot of times you get that move, and you can also confirm that move with order flow. So there's a lot of moving pieces to that puzzle, Sanjay, and basically what we want to do is we want to see all four of our puzzle pieces working together, and that because we're limited here in what we can do, it's kind of hard to do that with the slides. And what does the tool use to detect trend and only trade with the trend? Well, that was what you saw on the BloodHound template. And the BloodHound template is picking up the state of the VIX, plus it's also picking up 3 and in some cases 4 other charts to determine the trend. And that's why I am using BloodHound on these charts so that I don't have to go looking at 4 different charts to look at what a trend is telling me. I can just look at what I have basically in front of me. That to me is really important. RB asks, could you recap what the BloodHound like red and green vertical bands are? Yeah, what the red and green vertical bands, like I just explained, is a combination of different charts, including the VIX. And I also use a special version of the, or a different version of the VIX. It's not really special. It's called the VIX 9D, and the 9D part of it is basically options expiring within the next 9 days, not the entire options sphere. So that's kind of what is what you're seeing. And what I do if you purchase the BloodHound version of the software is I give you the BloodHound black box template so that you're able to go and test like I'm doing on this chart. I'm actually running 2 different things and I'm testing a couple different things. Desmond asked, there's no more tick divergence. No, there is tick divergence, Desmond. As you can see on the chart on the left here, you can put the price patterns with tick divergence on there. And the $ tick is actually something that I just recently incorporated into the BloodHound template also. So no, I still am looking at $ tick, and I am interested in tick divergence. So you can see that on the chart on the left. James asked, is BloodHound included with ZoneTraderPro? Is BloodHound extra? I have a BloodHound version of the software. And because the BloodHound version required some additional programming, that I charge $395 for that. But BloodHound itself is from Shark Indicators, and they charge $795 for that. But James, what I do is I will, again, call me and I will tell you, again, if we avoid using PayPal, I'm going to give you back some of your money on the commission that BloodHound gives me. So those prices don't include any type of discount. But like I said, if we can avoid PayPal fees, you're going to be paying less, and just give me a call for that. And Sean asks about back testing. Basically, Sean, what you saw in the slide with the numbers right here, this was, like I said, this was a 3-week back test. So when I did this, I'm not looking for any targets. All I'm doing is seeing if I'm being put on the wrong side or the right side of a trade. And in the video that I've created, I've gone into detail about the 4 different types of trades. So we have long accumulation, which is what we want to see. We have long special divergence, which is also on this chart. We have short special divergence, which going short, the 2 on this chart is what we want to see. And then we have short distribution. And for that 3-week time period, I broke down the numbers on the website. And basically the easiest place to find that is if we go to the blog here and we look at use SPY divergences to trade ES futures real-time example. And that YouTube video is going to be right here. RB asks, how are you defining trend? And that answer again is I'm letting the charts that is collecting information, and BloodHound is basically telling me the trend. So with the green vertical stripes, I'm saying that, you know, these are where we need to be long at. As you can see here in the as you can see here, you know, here's a couple of short trades, and you know, if you were long and you took profit, congratulations, you've made several points, and then immediately you're given the opportunity to re-enter those trades. So you know, that's kind of the point, is we want to, you know, trade with the trend, but we also don't want to ignore our short divergence signals, because they are still very accurate. And James Wright, is there a preferred periodicity for this to work the best? And the answer to that is, I don't have any type of preferred numbers that mean something to me. What is important to me is we have the close of a bar. So the lower the number that you put the tick at, so here the tick on the SPY is set at 70 and the ES is set at 300. If we want to see that information quicker, we put a lower number. I now use a number of like 45 or 50 for the SPY. And yeah, it throws a few more bars on the chart, but really at the end of the day, who cares? I want that information basically as fast as I can get that. And if something goes non-divergent, you know, I want to know that when I'm only 2 or 3 ticks underwater and I'm not 2 or 3 points underwater. And that's kind of what you end up seeing. So that's why I don't trade on any time reference, because if we traded on a time reference, well, we would need a bar to close. And I just don't have 1 minute to wait for information. You know, I want to see a new bar form every 5 or 6 seconds and get that information. Desmond asks about total hours of training videos. There's dozens and dozens of training videos, but what I do is I basically have about a 3 or 4 step process to take you through, where you learn the patterns, then we talk about order flow, and then we talk about the volume analysis. And at the same time, we're also talking about the divergence setups. So I really don't want to take people through the divergence setups, what we're seeing right here initially, because it's going to require a kinetic subscription. And the kinetic subscription is what gives us the VIX and the SPY information. So we don't want to be starting that before we are basically absolutely ready. So I do have basically, you know, a take you down the road type of syllabus and to get you there. Also on my webpage, what I do is I have the strategy itself, and I group all of the relevant training videos. So that's what you're looking at. And Desmond asks, you know, how many charts do I have? Basically, these are the 2 main charts that I'm looking at. I do have order flow open, but I'm not actually looking at it. What I've done is I've set audible alerts, because you need a bar to close before the order flow is valid. So what I've done is I've just set an alert. So it's not really all that important. I also have the $tick up. And so I have that to look at and reference. James asked, does the bid ask come from only one provider? Does it use NASDAQ Total View, and does it include the orders on different order flow platforms? Okay. I'm not exactly sure what, James, what you mean by the bid ask come from. I'm getting the information from Continuum, NinjaTrader Continuum, which is what I'm trading with. And then I'm getting the information for the SPY from Kinetic, okay? And again, there's 3 specific indexes on Kinetic that need to be subscribed to, and they total $19 a month for the 3 of those. And I've got a very detailed web page and on how you get that going. So it's not using whatever NASDAQ Total View is, and it's not using anything from different order flow platforms. It's using what Ninja gives us on Continuum, and then for the ES, and then it's using what Ninja gives us through Kinetic on the SPY and the VIX. Brian asked that if this can be scaled to a higher time frame, and actually that's a really good question, Brian. It actually can. What I do is I have a 7.5 point zigzag chart. Let me bring that over. And on this 7.5 zigzag chart, you know, again, it's really interesting, you know, how, you know, here's my exhaustion pattern right here. And then we, at that exhaustion pattern, we end up trading off, I can't see the numbers, they're hidden, 63 ticks. So a little over 15 points. And that basically called the exhaustion trade to the tick. And then we entered at this area right here, the counter trend trade. You can see that the VIX background here is green the entire time. And look what we did. We entered this strong trend here and just into the close at the end of the day. So yeah, I do look at this, and that's why I have it. I'm also looking at the $ tick. And down here, these are the volume analysis things that I'm going through. And, you know, for example, where we see this spike up right here, that's exactly what this volume analysis is all about, along with this spike up right here. And what that spike up or the spike down, like we got right here, what that represents is, in this case of the big down move and then the V reversal, this is representing limit order buyers right here supporting the price. And then at this point right here, it changes to the buyers being in control and driving price higher. Again, this is all stuff that I go over in detail. And you know, if we look at something like this, this is great. This is what I want to see. I want to see, as price goes lower, I want to see, especially at this last little point right here, I want to see the buyers come in and provide support. You know, that's really what is important to me. So Brian, yes, I do look at a larger time frame chart. Vincente asked how it works on the open when there is a gap, and how does it work on news or events, Trump tweets? Well, when it's on the open, Vincente, it's a real good question, and I address that. One of the things that we end up getting is it all depends if the VIX gaps. So if the VIX gaps, that is an issue. And kind of what we're doing here is we want to trade with the trend. So as we can see right here, we got this huge VIX gap up, which the indicator is going to read as a negative basically a sell signal for the template. And what we're trying to do here is we're trying to determine trend. So that's why I have this particular chart open. So if I'm getting a short signal just because of this gap, okay, it doesn't mean anything. I need to, the indicator needs to do its thing and then take into account what's happening. And it needs a few bars to do that. And, we're not going to be determining trend. This is the key point. We're not going to be determining trend at the open. I wish I had the Trump tweet from last week, but basically, I believe the market was trading at 34.10. My SPY divergence got short at 34.05 and took it down 55 points before we saw those buy signals on the accumulation down here. So again, we can use exactly what we're being given. There was something like 5 sell signals on the way down also. So again, we're seeing these things develop in real time. Personally, I did trade it, but I don't want to get into my results and what I did. But there were the real-time signals to get short, and then there were the real-time signals to get long, because once it bottomed, I think it traded up something like 23 points after that. And those long signals, there's 3 or 4 of them down at the bottom. Well, they came in before that market spiked 23 points. And, if you want to see that, like I said, give me a call and I'll pull it up. Really interesting. So it does work with that, because at the same time, the options market is trading also with the futures market. And in some cases, especially with the tweet, well, there's options dealers that need to start hedging, and that can significantly affect those moves. So again, it was a very interesting day, and I got no problem pulling it up and showing it to you. It was some real interesting stuff. Sanjay asks if I have a live demo class. No, Sanjay, it's not a live demo class. It's basically a live demo with me. And like I said, just give me a call and I'll show you how this is working live. That's not a problem. I want everybody to see it and understand. Desmond says it seems like it's a system with that needs a lot of training, and it actually isn't, Desmond. We have to know certain things, and it's the most difficult thing is, what is a pattern, just to be perfectly honest. And once we understand what a pattern is, the order flow is simple, because the order flow is telling us what's happening in real time. Here's my order flow chart. And, basically we're seeing all this stuff. We're seeing what the classifications are in real time.
Hey, Chris, I am so sorry to interrupt. We're going to have to wrap it up pretty shortly, but I just wanted to give you a heads up.
Okay. Let me, I'm going to need to start wrapping this up. So I'm going to kind of go through some of the questions really quick. We see, can we see examples of what conditions need to be present? Basically, Ed, you saw that is what the conditions are. I'm looking for my backgrounds, and I'm looking for spider divergence. That is, in a nutshell, the entry signal, which Jason writes about. the red line, yes, is the short. The green line is the long divergence, and if it turns blue, then it is non-divergent. Sanjay asks, what is the tick? That is the $ tick. Again, it's an index that the NYSE is putting out. The blood and Heinz asks, BloodHound templates are available. Yes, they are with the BloodHound version of the software. And Desmond, like I said, Desmond, I do a live demo. All you got to do is call me. And my contact information. So let's go, whoops. There we are with the contact information. I have my phone number and a contact page on the website. You can also get me on Skype. Just search ZoneTraderPro for right here. Here's the contact and name, email, and I'll get back to you. Or you can call me or just search ZoneTraderPro. And I do actually now monitor Skype, so I'll take that down. But I pretty much monitor Skype during the trading day. And I also have a YouTube channel which has all these videos in it. Any other questions? It looks like I've pretty much gone through everything. All right, Tiffany, I think we're good.
Thank you so much. Again, I'd like to give a special thank you to Chris Knox of ZoneTraderPro for a great presentation today. Everyone in attendance here today will receive an on-demand recording of today's event, so just keep an eye out for that email. NinjaTrader ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find value in these events, we hope you'll attend them on a regular basis. We would like to remind you that the information provided in this was of ZoneTraderPro and not of NinjaTrader. All information is for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spend with us. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader ecosystem. And again, thank you so much, Chris.